And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Wishing you a blessed and highly favored day. Now, I'm about to lay down some information, probably the most important video I've made this year, and it's a macro outlook on Bitcoin. And when I say macro outlook, I'm talking about where I think the price will go over the next 3 to 6 months, over the next 6 to 12 months. And for that, what I want to start us off is with the monthly chart. And I'm going to bring it over to my favorite exchange over here on Mr. Bitstamp for the longer price history. And what I want to do is throw in our secondary chart. And I'm going to get rid of the hash ribbons indicator. And I'm going to get rid of the MACD. And I'm just going to leave here the accumulation distribution indicator. Let's see, the accumulation distribution indicator, which is this guy right here. And I'm also going to put on the green 55. So for that, all I need to do is get the settings to open up here. Don't fail me now, TradingView. Yep, you're failing me. There we go. Okay. Boom, 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 boom. Okay. So now we've got our monthly chart on Bitcoin. We've got the accumulation distribution indicator. And what do we have here? So I'm going to put a horizontal bar in here. And just so it's dead accurate. This is where that low was in. And that low. Okay, perfect. All right. So let's start off with the best case scenario for Bitcoin when we're looking at a macro time frame. And the big question is, have we seen the market lows at this point? Is the bottom in like so many people are hypothesizing and guessing? And, I could say beyond a shadow of a doubt, I think it's highly, highly unlikely from a probabilistic standpoint. Again, based on statistics and probabilities, no, the low is not in. Why? Well, this chart right here, this monthly chart, and again, this is very, very long term, right? And this is a function of the interplay between the accumulation distribution indicator right here on the monthly time frame. And it's right there on the monthly. That's the monthly time frame. So here's the idea. Anytime we've seen a macro low, actually, the only time in Bitcoin's history that a macro low has been put in is when the accumulation distribution indicator has come below this level, right here. Below this horizontal bar right here. That's the only time ever, ever, ever in Bitcoin's history where a macro low has been put in. When I say macro low, right, again, we're talking 3 to 6 months, 12 months. That means the low's in and it's pretty much up only after that low is put in. As you can see, identified by this low here. The next pop was 340%. This one, if you had any fun on the March 2020 coronavirus dump, well, the low was in until we went up 971%. And this one back here, and you know what? Let's do a justice here. Let's use the logarithmic scale, but this was the low that got put in right here. January 2015, Bitcoin, $210. Had we all just broken off our wallets and broken the lock off our wallets and bought some Bitcoin back, I remember when it was $100. No joke. I remember some kid who was selling pizza the month before came up to me and he said, guess what? You should invest in Bitcoin. invest in Bitcoin. It's only $100 and you'll get rich. And boy, I laughed at him. I laughed at him, just like I was talking to a client earlier today, and or a potential client, a friend of a family friend. And he said the same thing. He's like, how do I know this isn't just, internet money? Magic internet money that I'm just investing in a bunch of air, right? And after that conversation, I realized, well, this gentleman really is not sold on the idea of Bitcoin. So he needs to watch the video, Banking on Bitcoin, or the other one on Netflix, Banking on Bitcoin, or what's the other one? I forgot, but I could leave a link in the description below in case you aren't sold on Bitcoin yet. There's 2 movies on Netflix and on Amazon. Sorry, one on Amazon, one on Netflix that I recommend watching if you're new. Okay, that being said, back onto the charts here, monthly time frame. Macro lows only been in when the accumulation distribution indicator has first gotten a negative slope and then gotten below this horizontal right here. And so why am I saying, hey, the macro low is probably not in? Well, we are quite a far ways away from getting below this level. This needs to come down quite a bit more. I mean, percentage doesn't really matter here, but you can see it's quite low, and the slope on this thing is, not very, very negative. It's more slanted, gradually coming down right now. Macro lows tend to get put in right after the thing is just going straight down. So that's one reason why. And it's important to know that even though, we do get below the horizontal line here, that doesn't mean Bitcoin, straight up from there, right? It usually takes a few months of sideways and down, right? Sideways, a few months of sideways before we go back up. Just look at this example here in 2019. So we got below it here and here and, right here. And so look at this. We spent essentially 1, 2, 3, 4, 5, 6 months of going sideways before we kind of took out this last high. And this wasn't, the greatest move to the upside anyways, but 300% is 300%. And more notably, when this thing starts to take a positive slope after we've come into the, deep dark red zone, right? Way down here. Once we take a positive slope, well, that is typically when the market starts to go up, as you can see here, And so we'll be keeping a close eye on this indicator to, kind of let us know when the bottom is in correlation with a few other indicators. And then you can see this example from 2015. I mean, we basically took, 2 years to reset from November 2014 to November 2016. So that was about 2 years to reset. And the best case scenario, again, for Bitcoin right now, I think is, a lot of waiting, maybe some sideways and, yeah, that's just my thoughts based on this indicator. And unless we get a bounce a week or so here, up towards this green 55 at 35,000, we'd have to retake out this kind of macro resistance support line coming in at $30,000, which I think is highly unlikely. I think, again, best case scenario for Bitcoin right now is we come in, fill up this gap on the CME somewhere around 27 to 29,000. Again, I don't think that's very likely, personally, with all the negative news out there. So, again, that is the best case scenario. On the monthly time frame, I think it's something like this. Bear with me just a second. And this is going to get really entertaining in just a few moments here when we get into what's going on with the stock market. But there's the low, 17 5. This low's 14,000. Yeah, so best case scenario, right? Bitcoin probably, you know, I don't know, comes down here, trades back up here, down, up, down. Maybe puts in some higher lows like that, and then gives a shot maybe 2023. Oh, that's all the way in 2024. Yeah, that might be a little bit more accurate. Do I think that's likely? No. So that was the best case scenario. What else do I want to bring up? Okay, another thing. Another point for the bulls here is the Tether dominance chart here. And I'm going to pull that up here pretty quickly. Hopefully it's somewhere in my stack of coins. Nope, I don't see it. So let's go ahead and pull up the Tether dominance chart. You might be saying to yourself, what is that? What is that? Well, the Tether dominance chart is pretty interesting because it shows basically the amount of money in Tether. And as the amount of money in Tether, which is a stable coin, goes down, typically the Bitcoin price goes up because people are converting their Tether into Bitcoin and other cryptos. Vice versa, when you see Tether dominance go up, right, typically that is when Bitcoin's price goes down. And there's a very, very, very good correlation on the macro schedule here for this happening. And what I can do is add Bitcoin on top of this chart here. And I'm going to use the line chart just to point this out. And also we have a massive ascending triangle here, which I'm going to point out as well. That does have a nice measure move up. So first off, let's take a look at this measure move right here. So how would we draw this out? Boom. And I'm going to go ahead and do like this. Look at those. Remember, 3 touches creates a trend. These things typically break at 75% full. Could we get it all the way back to here? Technically we could, but I'm going to leave it right here. So this massive ascending triangle. And then what are we going to do? We're going to go from the 50 percentile. And so we've got a little bit left to go on this measure move. I mean, close enough is close enough. That's the great old saying. Forgive me while I drink my Earl Grey tea. I love a little Earl Grey in the afternoon. And oh boy, I've got about 30 minutes. I got to wrap this video up and get to another appointment. So I'm going to do my best here. But there's a lot of good information. I worked really hard on getting this information out. Put together this weekend. So here's what I'm going to do. I'm going to first I'm going to make this a line chart instead of candles. So line chart, boom. I'm going to add Bitcoin, boom. And you can see how these have, let's put it on a weekly chart. Yeah. Wow. Log scale. What happened to my Bitcoin? Do we want to try it on a monthly and just see if it works here? Bitcoin. Boom. Where did it go? There it is. Okay. I guess if I put it on log, it won't show. That's weird. Okay, we got it on log. I'm going to add Bitcoin. Anyways, as you can see, when Tether goes up, when Tether goes down, Bitcoin goes up. Bitcoin goes down. Again, Tether's going up. And when Tether goes down, Bitcoin goes up, and vice versa. Now, Bitcoin going down, Tether going up. So if we've got a little bit more room to go on this, right? If Tether's got another leg up, that means, well, perhaps the lows are not in yet. Vice versa, if we come back down and violate this thing back at 4.86, and we get stuck back in here, hey, bull party to the upside. Okay, that's just something else to take a look at. And yeah, and I think that's it for this part. What else did I want to show you? The accumulation distribution indicator. And boy, this is not my normal flow, so forgive me. You know, everything is not as pristine as normal. But I'm going to get back onto my candles. Are those my candles? They look way different. On the monthly time frame, here we go. And we're still looking at Tether. So I want to get back to Bitcoin. And the Bitcoin accumulation distribution indicator. Nope, that's the one. That's the one. I'm going to take off that other Bitcoin off. Okay. There we go. Secondary chart. I'm going to get rid of this guy right here and this guy right here. Another thing to note is the average correction of 60% when the accumulation distribution indicator turns red. So where would 60% be from where this thing turns red? Is this going to be a point for the bulls? So we turned red right here. So, I mean, that is more in line with the bounce, right? And we're coming into those $20,000 highs. So we've got the 61% correction. Now, here's the thing is if we go to 70%, that's the average correction. If you go back and back test it, right? The average correction, 61%. And that's noted by Mr. Eric Crown. Great. Thanks for pointing that out, sir. Check him out. He's really good and way better than I am. All right. 70% down from here is going to be right here. 70% down at 32,800. Excuse me. 13,688. Okay. 75% puts you at that $10,000 range, which is something we've been talking about. And that is right in line with the support of all these guys, right? So this is why everybody's talking about it. Excuse me. Log scale. This is 10,000 right here. This is the last, kind of the last of the Mohicans. If this area breaks, well, I don't think it's going to be a stop until 64,440. And that's on a daily time frame. Okay. So for the people, another reason why I don't think the lows are in is we haven't felt the real panic yet, the real capitulation. People who've been around in this market for some time, for a long time, like I mean, I really haven't even been around that long, since 2017. Not that big of a deal. I started watching it back in 2015, but you don't feel the pain, the capitulation, the real pain unless you got skin in the game, and I didn't get any skin in the game until 2017. So real capitulation, real fear in the market where everybody thinks Bitcoin is dead, and that just hasn't happened yet. So probably going to come a little bit lower. And no, I don't think the Bitcoin market is over. Even if Bitcoin comes down to $6,000, no, I don't think it's going to go to zero. No, I don't think it's over. But it's not unlikely that an asset make a parabolic new all-time high like this, right? And then trade sideways and down for 1 to 2 years, even 5 to 10 years. It's not unheard of. Just look at Amazon and Microsoft. Amazon. This is where the fun part starts, guys. I hope you stayed to 20 minutes in the video. Right? 20 minutes in the video. So that was 99. We didn't reapproach the highs on Amazon until 2009. Okay, let's take a look at Microsoft. Where is Mr. Microsoft? MST, there's GME. Where did she go? Uh-oh, hurry up, Chris, with this video. MST. Not MicroStrategies, not Maybank. Is it MSQ? Ah, there it is. Let's take a look at Microsoft. And again, these are tech companies very similar to what Bitcoin is. It's a tech company for Bitcoin, for sending money anywhere in the world instantly for free. All right, parabolic blow off top here. Look at that, from 86, my birth year, to 59.2. Wow. So we went from 9 cents to 50 cents. That was a nice rally. Or to $60. Parabolic blow off top. How long did it take? That was the year 2000. We reapproached the high in the year, wow, January 2003. So that was 2000 to Microsoft. That doesn't look right. Oh, yeah. They're 2017. That was 20 years. Anyways, 16 years. It's not unlikely for a parabolic blow off top. That's the point. For it to take 5 to 10 years to get back to all-time highs, especially in these tech companies. So now let's look at what we all came for here today. Let's look at Mr. SPX. SPX. Why is it not loving me? I want to get back on my regular chart and get my bullish and my bearish divergences in. Got my RSI, my stochastics, and we're going to have a lot of fun right now. Look at what that chart looks like. I mean, parabolic blow off top, I'll let you judge that one. What do you think? But we're going to put it on log scale for fun. And this is really where it gets interesting. Okay, so this is what the SPY, the S&P 500 looks like, going back all the way to 1871. 1871, this is a nice chart, right? And what I'm putting the focus on is this 6-month time frame. So again, that's where your 6 month is. And we're going to look back all the way to 1871. So ultimately, what we can see here in the charts is a humongous long-term corrections, right? Which there's several of them, but we're going to highlight a couple. And why? Because they're very, very similar to what we're seeing today. And these corrections can take 10 years. 10 years. So the first one is right here. Right here. The roaring 20s, right? We had the roaring 20s, whatever that was like. You know, you're probably had a horse and buggy. You were flying around town with your horse and your buggy, right? And all of a sudden, 1929 happened right before the Great Depression. Let's see what kind of sell-off that took. That was a 84% correction. And how many years till we came back to retest the all-time highs? That was 1929. This is This is 1954. 1953, right in that range. That's when we reapproach the high. So you do the math from 29 to 53, 33 years? No, 23 years, something like that. That's a long time. That is a long time to be sideways and down. Okay? And then, yeah, so it took 25 years to retest the all-time highs. And those markets were quite choppy, quite dirty. Down and dirty. And that's where the Barons and the Rothschilds and all these people, guess what they did? They sold high, they bought low. They sold high and they bought low. And that's what I think we have an excellent opportunity to do right now. Again, not financial advice. I'm not a financial advisor. This is all for entertainment. Okay. So when is the next example of something like this? When is the next example? Well, it's going to be 1968, right? Which is right here. That's 1968. But in fact, really, it's 1973, right? And we don't retest the all-time highs until we get back to 1980. And I'd argue from a macroeconomic perspective that the 1973 highs have a lot of similarities to what we have right now. One of the macroeconomical perspectives. So one, if you look at the macroeconomic perspective, two, from a technical perspective, right? The macro perspective is that, look, we had inflation. It was running rampant. There was all kinds of political issues. And from a technical perspective, you do see what's called a bearish engulfing candle, right? That's what that is. A bearish candle where the bears came out and they took everybody to the cleaners right here. That's what it is. So what does that mean? 15 minutes, I got to go. Okay. So again, what is a bearish engulfing candle? You got to take out the prior all-time high and the prior all-time low of the following candle. So we took out the high and we took out the low on a closing basis. That is a bearish engulfing candle by technical definition. Where do we see another one of those? I'll tell you. Right here. See that guy? What year was that? 1929, right before the Great Depression. And feel free to go ahead and correct me if I'm wrong. And I'll just tell you, based on the 6-month time frame, nowhere else in this chart are you going to find bearish engulfing candles. So, and that again is where we trade above the high of the prior candle and close below the low, and closing below the wick low of the prior, more importantly. So we are fully engulfed here with a massive volume spike here in 1929, here in 1973. And what do you know? It didn't happen here. That was pretty close. Boom, right here in January 2022. This has only happened 3 times in history, guys. What do you think might happen? I'm going to go over some more reasons on what I think is going to happen. So do I look at this as a long-term correction right now? Long-term crash, not a correction, a crash, quite likely. And not only that, we have 2 drives of regular bearish divergence on the 6-month time frame. 2 drives of regular bearish divergence on the 6-month time frame. And bearish divergence, in my book, right, it's probably one of the best ways to judge a high from a long-term time frame perspective. So what is bearish divergence? When the price is making higher highs and the RSI is making lower highs. So price on a closing basis, right? This is technically a higher high. In fact, we even got a higher wick right there. That is your first higher high. Here is your second higher high. And that is a confirmed higher high because we bearish engulfed. We took out this guy. So we have 2 higher highs in price, and then we have 1 two lower highs in price on RSI. Excuse me, lower highs in RSI. So, and you got Stokes crossing down from a very, very high level. And you can just see, I mean, what happened here? When was this, by the way? Oh, that was the dot-com bubble. Bottom to top, that was 50%. Bottom, or top to bottom, excuse me, 57%. Okay, so that is that. And from 1999 to 2008, there was only one drive. And yeah, from 1999 to 2008, that was there. That was one drive. So you had one drive of bearish divergence. Do we have any more? No. So between that point and that point, price make higher high, RSI makes a lower high, Stokes cross down, and boom, 50% correction. Okay? This is a second drive, and this is going to be a more powerful signal. And that'll give us a drive down to a minimum, the yellow 21, probably the green 55, if you ask me, right? And in these bearish markets, what do you know? What do you notice here? The S&P does like to tap the green 55 and then rally. So would that be a decent buying opportunity? I don't know. You'll have to judge it in your book. Okay. So, and then again, the last time on the 6-month time frame, we had bearish divergence. I'm just going to try and make this as clear as possible so you all can see this. And again, that's where price is making higher highs. You got 1, 2, 3. 3 drives of regular bearish divergence, and that did it, right? So I'll draw it out for you real simple. Actually, I'll use the drawing tool here. So from this point here, right? 1, 2, 3. And from this point here, 1, 2, 3. And what kind of correction do we see there? Well, that was 48% and a shot down to green 55. And if you followed this channel for some time, 3 drives, the 3-drive philosophy will give you a shot down to the green 55. And it is probably one of the most consistent ways to call macro tops or just higher term time frame corrections. 3 drives of bearish divergence is enough to do it. Okay. And in 1929, we didn't see bearish divergence, but we did have a head and shoulders in the RSI. Again, credit to Mr. Eric Crown for pointing this one out. Really nice head and shoulders right here on the RSI. And that is something that tends to work out in most markets. What else here? In 1902 to 1919, there was 4 drives of bearish divergence. And I'll just point these out again from this point here. I'm going to mark it up here. So from this point here, right, we got 1, 2, 3, 4. Yep. And that gave us a shot below the green 55 all the way to the bottom side of the range. And that's what it does. It kicks you to the bottom side of the range, and then we had a nice little rally. So I'm going to take off all these little green lines. Let's see if it, boom, boom, boom. Okay. And there we go. So those are the bearish divergence drives. Now, what's the difference between these drives of bearish divergence here? Whoops. Oh, again. These drives and these drives. Well, you can see this drive of bearish divergence is coming from a much higher extreme, right? So higher than 1929, higher than 1986. That means the move is going to be that much more extreme, okay? And the divergence here is very important to note. And so why are we talking about all this? Why are we talking about stocks, right? The S&P 500, traditional markets. I bring this all up. In this case, I want to bring to you, and I just want to spend time talking about traditional markets because all these markets are interconnected. This isn't something I believe, and I sure didn't think this all up on my own, right? As a matter of fact, there are many, many people, much smarter people than I am, right? Much, much smarter people, smarter guys like Harry Dent. I don't know if he's smarter than me. Eric Crown, Crypto Savvy, Michael Burry, Jim Rogers. I mean, just to name a few, right? And here is the idea to think about, right? This is what happened over the past couple of years, since 2020, right? Since March 2020, the old coronavirus crash, dump, scam, shindig, whatever you want to call it. I call it the cabal, right? Even though I hate the word, it's probably the Davos group and, in bed with China and Joe Biden and the rest of those elitists over at Facebook and Twitter. But this was all planned out, just like the Fed has been saying. Inflation is going to be transitory, right? So here it is, right? Here it is. The Fed turned on the money printers, basically kicked the can down the road to, avoid the immediate effects of a likely recession down the road. And we are now down the road. We are down the road. And this may very well be the first time we're going to have to deal with legitimate issues in the world, right? To start, there's already a war going on right now, which is a proxy war for potentially a world war, right? And what happened in 1929? Well, that was the setup for not long after we had World War II. And then what happened in the 70s, right? In 1970, it was that. 1969, they took us off the gold standard by 1974. That was the beginning. We know what happened, right? So the 70s was a setup for the Cold War. And what about now? Is this a proxy war, right? A potential China-Russia team-up against the U.S. war? And to put it all in perspective, even Ray Dalio is saying all over the news, the dollar is not going to stand as the world reserve currency. We have too much debt. China has too many people. And world reserve currencies are meant to rise and fall, right? You had the Dutch Empire, the British Empire, the United States Empire, so to call it. And now what comes next? The Chinese Empire. So to put this all in perspective, despite this rather nasty downside move, right, which we were already down, from the highs, what is that, 24%? We're down 24% from the highs. But despite that correction, we've got 9.1% inflation. The Fed is just beginning to tighten and raise interest rates off of zero, right? And despite that, right, earnings reports are coming out. I'm willing to bet worse than expected. Stock market finally got kicked in the teeth a little bit at the end of the day today. I don't know what earnings news it was, but not only that, so they're raising rates. Unemployment, they say unemployment is falling, but it's just people aren't going to work, right? People are getting paid to stay home because you get a free welfare check. And that, all these things, despite all that, people are really upset. I mean, people sound devastated. I'm talking to people out there at their 401ks losing 30% right now, right? I'm talking to people every day who just feel blindsided. And I'm telling you this is just a jab, right? A jab before the 1-2 knockout punch. Why? You ever heard the great old saying from Mike Tyson? Everybody's got a plan till they get punched in the face. So we are still 60% above the COVID lows, right? Here was the COVID low. That's March of 2020 right here. Oh, what was that? That was not my ruler. Let's measure from the COVID low. We're 64% above the COVID lows still. So if you're looking at this from a macro analysis standpoint, right? The Fed has been kicking the can down the road for a very, very long time. The Fed's been telling us, hey, inflation is transitory. No, we don't see the chances of a recession. That's what they've been telling us. That's what they just said yesterday on July 15th, right? I heard the Fed, and I forgot if it was Ballard or whoever it was from the Fed, said they don't think there's a chance of a recession. I think it's absolutely hilarious that people even believe one word that comes out of their mouth. I think it's hilarious that people believe one word that comes out of the people's mouth on Bloomberg, and one word out of the president, speaker of the House. I think it's absolutely hilarious if you're watching the news and you believe one word that they're telling you, right? That they're saying it's all BS. And what's school, what's cool now, I think, is most people get it. Most people understand the government has been lying to us for years. So now people are going to YouTube. People are looking for alternative avenues to get information about what's really going on in the economy. Hopefully that's why you're liking and subscribing to our channel. Don't forget to do that. And we will continue to bring you some more amazing content. Post a comment below if you like it, and you want to help out the channel. And don't like it if you don't like it. Anyways, so what is the Fed saying now, right? They're saying, well, right, I guess we understand that we don't understand very much. And, well, those guys on social media, they got it right. Yep. So why do I say the Fed obviously knew that inflation was not going to be transitory to begin with? And I have a very, very hard time believing they didn't actually know, right? Why? Because they are extremely smart over there, despite what you may think. When you are the biggest for-profit bank in the world, and you have all the money in the world to get the best financial advice, to hire the smartest people. So don't think for 1 second they don't know inflation wasn't going to be transitory. So would it be reasonable for us to correct back down to these levels? Yes. What am I talking about? I mean, 3,000, the first stop with a small bounce, and probably all the way down to the green 55 if you ask me. And keep in mind, this will move up, I mean, just slightly every 6-month closure. So when's the next 6 month? That's coming in at 2,100 right there. Do I think it's reasonable that we come down to this little blue box, this little green box of peace and prosperity or death and despair? If we break below there, well, yeah. You're looking at a nice retracement from the all-time high. Do I think that? 67%. Has this happened before? Bearish engulfing, 84% down from the high to the low on this one. Oh, that's 60%. So a parabolic blow off top. Again, these things could take 10 years to come back, especially with the NASDAQ doing the same thing. The NASDAQ, all these tech companies, that's 54%. Oh, 60%, right in line with the green 55. And down here, that's only 68%. So if this thing really wants to get going, do I think we could get a wick all the way down there? I would love to see it personally. So what we are doing is coaching our clients on how to conserve capital and make money in a bear market. If you want to get a free lesson or download an investor guide, go ahead and click on the link in the description below. It says bitcoinadvisors.com. Click there. You can do a Roth IRA in crypto. You can do a traditional IRA in crypto. And maybe you have an old 401k laying around there from a previous employer, and you're one of those guys sitting on the couch and you don't have a job. Well, you might want to put that money to work for you, and there is no better place to do a crypto IRA if you ask me. I look forward to hearing from you. Have yourself a blessed day. Take care.